Good afternoon, everyone. Welcome to our monthly webinar on GST and tech session. As discussed in the last webinar, this webinar also will continue on 9 and 9C. The focus of today's webinar would be more on preparation of 9 and 9C. In the last session, we understood the content and the context of the form, what data to be filled, what not to be done, or what are the edge cases, how do we handle it. But in reality, when we are preparing, how do I extract the data from books? How do I classify? What are the types of workings that I need to maintain? These are the aspects, practical aspects we are going to discuss. We are going to do little slow so that you can make note and you can look at the workings. I'm sure some of you or most of you would have prepared your own GSTR 9 and 9C by now, and yet verifying certain information and waiting for filing, or some of the returns are yet to come. Each one of us would be in various stages. You could have also had some doubts while you are preparing, especially with the new table 6A1 coming in, the change in 6H for the year and previous year. The second advisory that had come after our next session, which said that it's okay for the difference being in 12C in 9C. So these are also we are going to cover today. And feel free to ask your questions, because what makes the webinar most useful is you walking out, being more clear what we have to do. With me, I have my colleagues Divya and Ashika, who would be walking you through whole of the session, and I would be there almost for first 1.5 hour to answer any of the questions. Yeah, welcome you all again, and over to you, Ashika.
Good afternoon, everyone. I hope I am audible. Okay.
Yes.
So, as Sir said, today's session of our is a continuation of our last session. In our last session, we have focused on the understanding of the structure of annual return, where we have discussed what each table capture and how the data flow from GSTR 1, 3B and 2B. The thing is that once form is understood, the real challenge which begin is the working which behind the annual return. So before we dwell into the detailed working, I will take about 5 minutes to set the context of GSTR 9 and 9C, especially for those who may not have attended the earlier session of our understanding of the form of annual return. As we know, this GSTR 9 and 9C is not a new concept or is not a fresh compliance. It is there from the day one the GST has been implemented. But this time for the financial year 24-25, they have incorporated lot of changes in the reportings of the tables. Like one of the challenging tables which people are finding is table 6 of the GSTR 9, which deals with your ITC, where they have divided the reporting of input tax credit reported in GSTR 3B into two parts. Basically, the ITC, which belongs to 23-24, claim in 24-25, and ITC of 24-25, claim itself in 24-25. So they have introduced a two subtable to capture that data, 6A1 and 6A2. Also, they have incorporated this time rule-wise reporting of ITC reversal in table 7. Earlier, there were many optional field where we can report wherever we are doing adjustment in residuary like tables like all other reversal. But now this time they want us to report even the reversal in a specific tables, specific rule due to which we are reversing the ITC. Part 5 of GSTR 9, which deals with the 24-25 impact taken in 25-26. Those also require to be mandatory reported in Part 5 of your GSTR 9. Now, due to this reporting changes and mandatory field, there has been an impact while doing reconciliation between books GSTR 9 and then coming to 9C RICO, which we are obviously going to discuss one by one. As we said, the objective of our today's session is not just to explain what to feel, but to walk you through how to arrive at those numbers. So we'll be looking at this step by step, how 9 and 9C are prepared, how turnover and ITC are to be reconciled with books of account, and what kind of checks and validation should be done before filing the return.
Ashika's screen is not shared yet.
Yeah, I'm sharing, sir. So as annual return, the turnover limit, they have kept it as same, which is there from the implementation of 99C. From implementation of GST, that is from 1718, that is 2 crore and 5 crore. If your aggregate turnover is above 2 crore, then you are required to file GSTR 9. And if your aggregate turnover is above 5 crore, then you are required to file 9 and 9C both. So this, they have kept it same. Then 9 and 9C has the same number of part. There are total GSTR 9 consists of total part 6 and GSTR 9C part 5. Tables are more or less, tables are also same. The only thing they have done is they have introduced sub tables in the respective tables just to give more clarity and to fill the data more properly so that reconciliation have a better picture. Earlier, which were difference column were coming, to some extent it get reduced. So we will be taking you one by one. So our flow of session will be, first we will be discussing about the outward reporting, then ITC, RCM, and at the last we will be discussing on the various validation check you should do before filing your 99C. This will be the source of information you should keep ready for the purpose of filing your 990. So we know we require GSTR 1, we require 3B, we required books, we required 2B. But you would be noticing that in our slide, we have kept one additional information which also need to be kept ready in order to fill the 99C. That is GSTR 3B of next year. There may be a case 24-25 related some impact, maybe tax or ITC you might have taken in 25-26 of GSTR 3B. Those also you required. GSTR 9 of previous year. Now, if any of the previous year, like part 5, which is there in the current year, like 24-25 reported in 25-26. Similarly, 23-24 may have impact in 24-25 also. So we need the previous year data also to see what would be the impact due to which will be there any reduction or increase in any liability. Then if due to while doing any RICO, if you find out any tax not paid, short paid, or any ITC wrongly availed or wrongly utilized, those all adjustment, if not taken care while filing 3B, need to be paid separately through DRC 03. Another part which you are finding is notice or order from department or refund claim. These are only for reporting purpose. This will not impact your reconciliation. There is a separate table which required us to report for any demand which is made by the officer. Adjudication order we are talking about. Show cause notice reporting is not there. Only when it is converted into order, from that only reporting comes. Similarly, if you are into export or input IDS, inverted duty structure, where you are eligible for refund, then for refund also there is a separate table where I have to report about refund filed, refund sanctioned, and refund rejected. So this notice and refund is just for reporting purpose, will not hamper your RECO. But other data will hamper your reconciliation based on how the adjustment or timing difference is there. With this, I will hand it over to Divya to take you through the outward workings. Divya.
Hello. I think the screen is visible.
Yes, visible.
So today I'm talking about outward part. So as ma'am told, there is three parts like outward part, inward part, and RCM checking. So now I'm talking about outward part. What all of the items need to be checked while doing the outward summary or outward part calculations? What are all the things we need to check? We need to take care and all. So before going to thorough in the workings, we need consolidated 3Bs, consolidated 2B, and whatever we have quoted through R1s, full year R1 we need, audited financials we need. Through that, we need to start the workings. For that purpose, I'm going to check what all of the items need to be my outward supply. For the outward supply, we can check the credit side of the P&L account. First, we need to.
Divya, can you put into presentation mode?
Yes, sir.
Can you just put it into presentation mode? Screen will be bigger.
Yes, sir.
Yes.
Okay, sir. So, for the outward part, we need to check what are the items will be my supply. For that, first we need to. I am taking you to practical example. So,
We are not able to see the Excel.
yes. So now you're able to see my screen?
Yeah, maybe we can zoom the Excel, the left side part, and you can press Control F1 so that the screen will become bigger. Yeah.
So, okay, let's start. So first we need to take care of our books. Whatever are the books? Books means our audited financial statements, but they have reported as my turnover. I'm segregating that turnover into revenue from operations and other income here. You can see the sales is this much, 12 crore. Sales incentives is 1 crore something. Discounts received is 15 lakh. Like that, I'm segregating every sales into detail.
Yeah, just
Then,
be there. Just be there, Divya. Maybe you can press Control F1 so the about top will also get. Yeah. Okay. So, friends, if you look at the screen clearly, maybe little go up, just no, onto the left, be on the left, be on the one line. I'm not seeing the total turnover. So if you look at in the current case, there is a total turnover of 14 crores 7 lakhs 73,000. Now this should be your start point, and this 14 crores is what you have to see whether it is there in your signed financials or not. Whether it could be from revenue from operations, other income, direct income, indirect income, wherever it is in the P&L, you always need to start from what is there in the signed financials. In the current case, we are assuming that the 14 crores is there in a P&L with one GST number. Assuming the signed financial is showing 30 crores, you segregate it with the number of GST numbers, but still the start point would be the audited financial statements. That's the number that you have to take, and entire line items in that should also be considered. When you think that, okay, it is not even applicable for GST, there are various reporting sections to address. It could be as simple as dividend income, or it could be an F&O transaction, forex gain, or you have written back some creditors. It could be any of that, where you think that, okay, I don't even want to show it. There are placeholders to show it at different places, but the start point should always be the signed financials. Yes, Divya.
So, as per Sir said, we have to make a base as signed financials, total income. That is 14 crore. Here we can see that is 14 crore 7 lakh. So here we can see revenue from operations and other income I'm receiving. I'm calculating as this as my total turnover. From here, we need to check this other income. We need to take care of carefully because it will be inclusive of exempt income also, taxable also, non-GST also, whatever. It will be inclusive every items. On that, we need to check what and all the items will be have the tax implications, GST implications. We need to take in care. Here you can see the profit on sale of laptop and rental income. It will be the taxable implication. So it will be my part of turnover.
So first thing over here is basically based on this 14 crore, we are dividing the various head which is there. So first we are just subdividing because we can't just because revenue from operation is showing 1360, I can't make 1360 as a taxable. I have identified in this revenue and other income what are the component included accordingly beside my GST liability. So this is what the first step has been done, where we have just subdivided the various head which are there under group under revenue and which is group under other income. After getting the heads which are there, we will be deciding what qualify as a taxable turnover, what will qualify as non-taxable turnover. As you know, the first step which need to be done from the books is to drive from books to GST turnover. As we are well aware, it's not important that book turnover will be equivalent to GST turnover due to multiple reasons, which is also what is captured in GSTR 9C. And that's the reason 9C table, when it comes, though it start with audited turnover figure, which is 14.7 in our case, but it also provide from 5B to 5O various adjustment because it itself is recognized the way the books is accounted is based on accounting standard. But where the GST comes, the liability will be decided or discharged based on time of supply. So both work on a different time limit. And that's the reason we first need to do the exercise of driving books to GST turnover, which is what now Divya is going to take you through.
So this is, as a ma'am told, this is our turnover as per our financial. From here to reach the GST turnover, we have to do some adjustments, like GST adjustments. Like if we going to our balance sheet, current assets, there may be a unbilled revenue. There may be a in current liabilities. There may be a advance from customers received, and maybe financial credit notes will be there. Some sale of fixed assets will be there. So these adjustments uh, will be the implications. It will affect my GST turnover from arriving to my as per turnover from audited financials to GST turnover. These items will be a big matter. Okay.
Now, if you can see, let us first discuss currently the scenario which we have plotted on Excel. Now you can see we have shown the sale of 12 crore. We are showing sales incentive of 1 crore. Then there is a discount receipt 15 lakh. So first let us discuss these three items. Now say we know it is a taxable item on which GST you need to pay. Sales incentive, being in the nature of incentive, this is also taxable item, therefore classify as a taxable territory. Sorry, taxable category. Now discount receipt. Discount receipt was received from whom the purchases made. So it is not my outward supply. On the inward, on my purchases which we have made, we have received as a discount. That discount, instead of setting it off with the purchases, has been accounted under revenue from operation as a credit item. As it is accounted over here, and from audited financial turnover, it becomes, we have put it as a 5O adjustment because I need this too as my taxable 1350. But it is included what 1366. Even discount receipt is also included in the income. So how I can exclude this adjustment? By reporting it as a 5O adjustment. Now coming down, other income. Similarly, here also we have to do this exercise because our 5A of 9C will start from 14. And from 14, I have come to my taxable turnover. That's the reason we have to do all this adjustment. Now here you will find other income. Now it has been noticed in other income that people most generally skip this. But there are cases where even the other income may have a possibility in it. Like in this. First is creditor written off. You will say there cannot be any taxability, GST outward liability. Correct? There cannot be. As it's not a supply, it's neither a taxable supply, it's neither an exempt supply, it's neither a non-GST supply. It's just a book adjustment. That's why it has been marked as a 5. Profit on sale of investment. Even though it is an investment related, but again, it is not a supply, therefore 5O. Profit on sale of land. Again, not it's a non-GST, you can say, but non-GST is sale of land, not profit on sale of land. So therefore 5O. Profit on sale of laptop. Here you will see we have marked this as a taxable, but the thing is that profit on sale of laptop, when the asset comes into picture, GST is not leviable on profit. It is leviable on sale value. It is only in the case of vehicle where the GST is leviable on margin. Apart from vehicle, in all other case, wherever asset sale is there, it will be on the sale value of the asset. Here, profit on sale of land. Here also you can say it is also an asset sale. So sale of land but no GST in a schedule 3 item. Now there is one more income, rental income. Here the rental income was coming from a taxable commercial property. There we have classified it as a taxable supply. Now if you will know from 14 crore, now we will come down to my taxable supply. So here you can see my taxable supply is sale and incentive and rental income, which is coming to 13 crore 55. But in this we have added one more item, that is sale of asset, which is sale of laptop basically. 3,000 is the profit, but the sale value was 23. So my taxable turnover become this plus this plus rent plus my sale value of the asset. So this became my taxable turnover. Now to arrive at taxable turnover of 1355, this is how you have to do the adjustment. Now all of this adjustment we have classified under 5O. Why? Because if you will see 9C, the tables which is there from 5B, 5M does not consider this as a separate line item. So all has been put under 5O to arrive at the GST turnover.
Yeah, Ashika,
Yes, sir.
can just zoom between row number 10 to 29. Yeah. Okay. So yeah, come to the left. Huh. Okay. So friends, now there were questions that people asked. What is 5O? 5O, when we are saying it is 5O in GSTR 9C, not in GSTR 9, it is 9C. Point number one. Point number two, 5O is other adjustments. Something between 5A up until your 5 HJKL, you have various adjustments that needs to be done. But your point is not fitting into any of it, you will be putting into 5O. There is another alternative, which again you should be noting. There is a table 5F of GSTR 9. Can you just go to one tab below before and go to GSTR 9 table 5F? Can you show that please? Table 5, we all know it is transactions which are not liable to tax. And if you see here, it is saying 5F as non-GST supply, which includes no supply. Now, if your turnover is 14 crores in the books, but you say 1 crore is not at all liable to tax, either you reduce it in 5O of 9C or you report it in 5F of 9. How do I choose between both? Whenever you have a negative item in 5O, you need to be doubly careful because the notice is for certain. Or if you are reporting a value in 5F, saying that you would be deducting so much, even then you need to have a workings why that you are treating this as a non-taxable supply. So having a working for both 5O of 9C, 5F of GSTR 9 is very important. It's equally important that you trace to the officer under which notification, which circular, why are you treating as this not a supply. I can understand if it is 9-2 petrol or it is something which is not transaction in money. So you need to have a working for this. This is very important while you are filing your annual return. If you find a value either in 5F or 5O, you need to be extra cautious. I hope you understood 5O. Everyone, there were a couple of questions. Any question? Maybe you can ask again. Please proceed.
So we arrived the GST turnover. From here, we need to take further steps like we have to through R1 we will report this is my B2B supplies like registered persons. I have supplied to registered persons. This much items I have supplied to unregistered persons. This many credit notes I have, or this many cess without pay I have. This many exports we have. Like that, we are putting this table. Tax type segregation we have to do here for reconciliation for the purpose of reconciliation we are doing here we need to report every items tax type segregation we have to do here like b2b b2c b2b cn we will think why b2c credit notes is not there it will be the netto figure this b2c figure will be the netto figure Every cess without pay, export without pay, exempt. Exempt also will be here. Non-GST also will be here. Exempt will be, we will think it will be exempt, but we need to check the notification. As per the notification number 12, is it exempt or not? We have to take that time. So every segregation will be here. As per this side, you can see this is my R1. From the R1, consolidated R1, I prepared a pivot table. I put the B2C, uh, uh, R, B2B, everything I am putting here. To checking purposes, I am giving there. After this tax liability is matching with my GST turnover. The next checking it will be like that. This should be matched with your GST turnover. This this also need to be taken care. B2B credit notes we have to report separately here.
Divya, can you go top 90? So over here, we have only covered few adjustment, but you have to check which adjustment is applicable to you. If you will notice from 5A, first part 14 crore, okay. Revenue from operation, other income added came 14 crore. Now comes the other adjustment, unbilled revenue, 5B. So you have to check your current asset, whether any unbilled revenue you have reported. It's a balance sheet item. So go to your audited financial, your current asset schedule. Over there, you would have shown unbilled revenue. So opening and closing, you have to report over here. Reporting of this transaction from 5B to 5H is not mandatory. It is an optional field. But it is important if you report separately, even if this is an optional field, because if you do all your adjustment in 5O, it will show a huge amount in some cases. And this huge amount will unnecessary will trigger obviously department notice, or it may be selected for audit. So even though these are optional field, you fill it so that you will be also knowing what plus minus you have done and what is the reason. Now, one by one, I will just let you know which are the schedule you should refer in order to get those details. So for UBR, go to your current asset. It will come in service industry. So whoever are into a service industry, please check your current asset if there any unbilled revenue is there. There is separately unbilled revenue at the beginning of the financial year and separate reporting for the at the end of the financial year, 5B and 5H. We have already discussed in our previous part about how the unbilled revenue and all works. So I'm not going into it again. Then 5C, which you can see is advance. Again, you have to refer to your balance sheet item. Now over here, what we are trying to focus is, it's not important that your everything, every data will flow from profit and loss account. It can be a case the GST adjustment may flow from balance sheet also, like UBR, advances, your deemed supply. If for advance, go and check if anything you have shown as advance from customer under current liability. That also you need to pay tax. But on advances, taxability will only come in service industry. Because for goods, they have given the benefit, they have given the exemption that you are not liable to pay at the time of receipt of advance. But when it comes to service, they are saying you are liable to pay at the time when the advance is received. So do check your 5C if in your current liability you have shown advances. 5D, deemed supply under Schedule 1. Now, what is deemed supply under Schedule 1? What it can come? So I'm talking about common common one which can come is stock transfer, cross charge, related party transaction, and your cross corporate guarantees. Corporate guarantee is now a pain point, though from the government point of view, it is taxable. That is your call whether you want to pay or not. But this all fall under the deemed supply under Schedule 1. Even if you are a multi GSTN, then you have to check for cross charge, any common service or any service or by one unit to another unit. So there will be a cross charge invoice you have to do. Stock transfer inter unit, that also need to be reported over here. This is deemed supply, it's outside balance sheet item. Even in balance sheet, because balance sheet is prepared at pen level. So inter-unit transaction means one GSTN to another GSTN is not captured in balance sheet. But even though not captured in balance sheet, but as per GST, it is a taxable supply. So you have to separately add it to your books turnover. Then credit note issue after the end of the financial year. Any financial credit note, if you have, financial credit note are the credit note which is issued beyond the time limit prescribed under GST law, or the credit note which is issued for a reason other than specify under 74. So any credit note for which you are not eligible for tax deduction need to be reported. Trade discount, if any discount is there, which is not as per section 15 valuation rule, that also you need to add it. 5G is not relevant for us because it's a 17-18 story which has ended. UBR I already discussed, advance already discussed, credit note same thing. Then comes adjustment on account of supply of goods by SEZ unit to DTA. Supply from SEZ to a domestic is considered as import of goods by domestic unit, and therefore this will come only when you are filing GST of SEZ unit. So if you are filing a GSTR 99C of SEZ unit, then only it will come, because in books turnover, it will be forming part of income supplied by SEZ to DTA. But when it comes to GST, being considered as import of goods by GTA, same will not be considered as a taxable turnover or taxable supply by SEZ to DTA. That's why reduction is there. Then 5L is your turnover for the period under composition scheme. If anybody was there who was earlier composition converted into regular, to means within the financial year, to adjust that, this column is specifically given. Then 5M, your adjustment in turnover under section 15. Section 15 is your valuation rule. There are few cases, rule 32, where they have provided special valuation, means where tax is not charged on the sale value, but they have given a different mechanism to drive the sale, to drive the taxable value on which GST is applicable, like air tickets. There is a different rate. Base fare 5%, foreign fare, base fare for domestic ticket 5%. So they have given that different rates and different way to arrive the taxable value. Similarly, they have given for exchange currency how it to be done. So where the valuation impact is there, due to which it doesn't match with your books turnover, that need to be captured in 5M. 5N, Forex. Forex gain and loss, if anybody, if you are in export, then it will come into picture. And if there is a gain which is incorporated in 5A as a turnover, part of a turnover, then you have to reduce in 5N, exchange gain or loss, accordingly to arrive at your GST turnover. Come to PPT. Divya. So here, why we discuss is, when we say here, if you will see, the slide is titled as supply can be anywhere. Like we discussed, credit of PL, other income. What we have noticed is people focus more on revenue from operation, and other income they completely ignore. Whereas other income can also have a GST implication. Now, not important that every time it will be by way of outward supply, outward taxability, but it can also have an impact on your ITC. So first, if you will see, even though profit on sale of laptop is recorded, on that you are liable to pay GST. Rental income is there, which is of commercial property, you are liable to pay GST. What we noticed while doing the working of this client, they have missed out to pay on this two items. So our saying is you should focus even on not just direct income, main income from which you are earning revenue in your business, but also ancillary or incidental, any income has come to you, that also you should verify whether GST can come or not. First. Second, if you will see the head which are there in other income on the Excel sheet, there is one called creditor written off. Now, if you see the word creditor written off, it should immediately click to you about payment to your supplier. If you see, one of the condition of input tax credit is I should make payment to my supplier within 180 days in order to avail the ITC. If I don't make payment to my supplier within 180 days, I am required to reverse the ITC, though I can reclaim that ITC once I make the payment. But here it is written as creditor written off. It means payment has not been made. Now the question which arises, it can be a case the creditor which has been written off is where you might have availed the ITC, and due to non-payment, ITC may be disallowed by the officer. So that you need to check. So what we are trying to say, there is a correlation between even what is recorded in the income side may have impact on ITC due to book adjustment. Second, if you will see, profit on sale of investment, profit on sale of land. Profit on sale of investment is non-GST item. Profit on sale of land is also a non-GST item. But even though as an outward supply, there is no GST applicability. But when it comes to input tax credit, Rule 42 comes into picture. So you are required to reverse the ITC under Rule 42 because of this profit on sale of investment and profit on sale of land. Because for the purpose of Rule 42, this too is considered as exempt supply. So this may not be impacting your outward liability, but this other income is definitely impacting your input tax availability. So that you need to check before you move forward. Again to slide. Then another thing is debit of PL. There are cases where we have seen that certain income has been net off with expense. So let me show you one.
Ashika, also there is a question on a discount received from the supplier. They have recorded as other income, financial credit note. Touch it upon later.
So here, this is another client data. Here you will notice this, we have put one screenshot of revenue. So you will find out that my revenue for 24-25 is 5 crore 64. So 5 crore 64 is the revenue given. But here what they have done is they have net off part of the income with expense. As you can see in this table 14, I hope it's visible. If you want me to zoom, you can let me know. But if you will see over here, part of the income they have net off with expense. See, learning and other event expense, net of sponsorship. So there was 39 lakhs earned as a sponsorship fee, which instead of recording as revenue has been net off with expense. Similarly, there is a event management reimbursement fee, advertisement fee. there are various other income which has been earned, but which has been net off with expense. So now what we should do? Though 5 crore 64 is what my balance sheet is showing, but in that I have to add separately this income which has been net off with expense to arrive at actual taxable value on which I am liable to pay tax. So this netting off of expense at the income side, if you go to 9C, does not have any head from 5B to 5N. So again, it will fall under 5O. And as you are increasing, here it is an increment because I am adding 5 crore and adding 13 crore to it. So officer will definitely not question it. But what we are trying to say is we cannot solely rely on the audited financial first phase statement of profit and loss account that this is my total income. So this is what I am liable to pay tax. If we go in that assumption, we are going in a wrong direction. So we have to verify full books of account to drive from books turnover what could be my GST turnover. Again, if you will see, sale of fixed asset, we have already discussed. So for this, you can refer your fixed asset register. As we are doing 99C when whole books of account has been closed. So you can go to fixed asset. You can see in there, deletion will be there. So if deletion is written, there can be a case this deletion has happened on account of sale of fixed asset. So if it is there, even though it's not a PL item, because in PL only profit will be recorded, but for GST purpose, you are liable to pay on a sale value. As I said, only for motor vehicle, it is margin. Apart from motor vehicle, on asset, you have to pay on sale value. Liability side of balance sheet, advances, which we just now I said, you have to go to your balance sheet, current liability, identify any advance for customer you have reported. If there, only in case of service, you have to add and pay the taxes. These are outside financial statement, which we discuss about the schedule 1, deemed supply. So that also you need to take care. So what we are trying to explain is don't wholly and solely rely on this audited financial PL. Go and read full balance sheet properly because your taxability under GST can be hidden in balance sheet also and outside balance sheet also. So that you need to be carefully checked and verify. Divya, over to you.
Next. Next, we need to report rate-wise segregation. Here, we segregated as per the tax type, B2B, B2C, cess with auto-pay, like that. But here, we are segregating as per rates. As per the client, we have so many rates, maybe a 5%, 12%, 18%. Whatever the sales as per the rate, we have to report it here. Like here, this is a goods industry. This client is into goods industry and they have only 18%, 18% only. So I'm reporting here is my, this is my flexible value, IGST, CGST, SGST, whatever I have, I reported it here. And I compared as per R1 here. I took a pivot table here as I reported here also, whatever the rate-wise segregation. After this rate-wise segregation, we need to report it is in the GSTR 9C table. This impact will be here. See, the 18%. 18% I am reporting here. So this will be from the base sheet. Okay. The next is tax paid versus payable. This is purely based on my 3B. Whatever I reported as 3B, whatever I paid to 3B, it will come here. As per 3B, I paid 13 crores 57 lakhs payment. Have paid. Liability, RCM liability, I have paid this much. And this is up to last year R1. Last year payment I have paid. Last year liability I have paid this year. So prima facie it will be this much only my tax liability. But as per my books, 1355, I reported 13 in 3B, I reported 1357. So you will think, okay, I have paid more, but it's not paid more. Is it will be reduced this much. It will be reduced my tax liability. Here, I need to pay 12,000, 12,000. That is totality. Again, 24,000, I need to pay more. It will be payable through DRC 03.
So here the thing is, once you drive your GST turnover, now you have to make sure you do the various RICO to check whether everything is going in a correct fashion. So the first thing over here, the RICO which has been done is type wise, means what has been reported as B2B, what has been reported as B2C, what is credit note, any SEZ, export, means what are the type of supply. Accordingly, this has been divided. Then we have done rate wise segregation. All this segregation which has been done in this site C to G is has been done based on books which are being compared with what has been reported in R1 to identify whether there is a discrepancy between what is reported in R1 and what is coming in books. If there is a discrepancy, then appropriate action need to be taken. Like just for example, if you check here, there is a credit note which says 5,53,000. Now in this instant case, this credit note is matching with what has been reported in R1. So there is no issue. But there can be a case where you have issue a credit note, but you miss to report in R1. Then what you should do? Now you have even pass on the tax reduction benefit to the your recipient. But however, you have missed to report in R1 and 3B. Now, as per law, you are only eligible for credit note benefit only when it is reported in R1 and 3B. If it is not reported in R1 and 3B within the time limit, which was October 25, so by November return, you should have shown. If you have not shown in the November GSTR 1 and 3B of 2025, then this benefit will not be extended to you also. Why? Because as you have not uploaded the credit note, your recipient would have claimed ITC on a gross amount, not gross minus credit note. He would not have availed net ITC because your data is what get auto-populated in GSTR 2B. And based on GSTR 2B, your recipient would be claiming ITC. Now you can say that why I should suffer, or it can be a case my recipient would have claimed net ITC only. Then you have keep ready your declaration from your recipient that they have availed the ITC net, means after reducing the ITC to the extent of credit note. But obviously there will be a litigation. But if not reported, see the quantum involved and accordingly take the action. Then comes your other supply. In our case, there is no other supply. But if you have SEZ without payment or export without payment, don't just focus on the figures that, okay, my books and my R1 figures are matching, it's enough. No, because with the export zero rated supply, there are various compliance which kicks in. First, if you are doing without payment, you should have executed LUT. You should check for that. One. Second, realization in Forex. You should check whether you have realized the money or not. Third, if it is a SEZ, invoice is required to be endorsed by SEZ officer and it should be used for authorized operation. Those compliances are important if you are declaring anything as a SEZ or export. And if you are claiming a refund, then you have to make sure, because if these compliances are not there, the refund sanction, you will require to pay it back. So annual return filing is like once again re-verifying the type of supply you have disclosed. Where you are paying tax is not an issue, but where you are not paying tax, disclosing as zero rated, exempt or non-GST, working papers and the basis of saying it to be non-taxable, you should be ready with it. And this is the correct time because over here we are doing full RICO and everything. So it get easy year by year if we maintain all the papers. Then what is exempt? Now you will say why there are, if you will see my GSTR 9, there are 3 categories given. One is exempt 5E, one is nil rated 5F, one is 5G non-GST. There are 3 categories they have given. Now, 5F non-GST is mandatory to report. 5D and E, exempt and nil rated, they have said you can opt for any of the field and you can write. What is non-GST? Non-GST is basically your Schedule 3 item, which is not covered under GST. Plus, the things which has kept outside the GST, that is petroleum product. So Schedule 3 and petroleum product are the one which is a non-GST. What is exempt? Exempt are the one which is specifically exempted by notification, like notification 12, which exempt the services. So those are the things which qualify as exemption. Now, if you will notice in base sheet, there was one rental income and we said it to be a commercial property. Now, if this rental was of residential property, then it is an exempt supply. So then it would have considered as exempt because this is specifically covered under notification 12 as exempt supply. So all these classification are important, and what you are classifying, you should have the base, the reason for such classification. Then comes your rate-wise segregation. We came to know what are our supply. Then we have to divide our taxable supply based on the rate applicable. Now, rate applicability, in this case, it is only one rate, but there are cases where people are liable at different rates. So where people are liable at different rate, you have to be careful. Reason being, there can be a case, it is taxable at 12%, by mistake in R1, you reported 5. Okay, because we are talking for 24-25. IMS came into picture this year. Earlier, people were not having full option to reject for full years. There may be a case you amended, not amended, corrected. So now is the option if you have wrongly disclosed the transaction, though you can't rectify it in R1 and 3B, but any tax payable can be paid through DRC 03. So your rate verification also plays a role. And where you are a multi-GSTN person, where you have different GSTN, then it's also important with this RICO, one more RICO will come, that is your GSTN wise total should match to audited financial. So I will add number of GSTN you are having, 1, 2, 5, 6, 8, 9, 10, whatever may be. Those total should match with your pen level turnover. That verification also you have to do. If your pen level turnover is not matching, it may be a case somewhere you have done error in reporting, or it may be a case of deemed supply, but on case to case basis, it need to be re-verified. Once you have done this bifurcation, compare with what has been reported in R1, what has been taxed. Now the thing which will come is what tax has been paid. Now over here, as you are able to see, we have derived our tax to be payable as 220, 120, 120. So total 2 crore 43. Now over here, we have to try one more point just to make it little interesting. So if you see prima facie, my table 3.1a, this refers to 3b. So if prima facie, you will see my 3.1a means tax paid in 3b and tax payable as per books. You will find that there is a excess payment. I hope if anybody have any query, they can put it on chat box or they can raise their query, because I know I am going on too much of figures and Excel plotting. So I hope you are able to see that I am liable to pay under CGST. I determine my liability as per books 120. I paid as per my 3B 121. So it's appear I have excess paid of 20K. But when we went into RICO, and if you remember, I told you at the starting of the session, the documents which you have to keep ready. And one of the document I said last year 99C working. So from last year 99C working, we saw that we have said that 23-24 liability has been discharged in 24-25. So we have mentioned that 32K of 23-24 has been paid in 24-25. If that is the case, then my actual tax payment for current year after excluding the previous year tax which is paid is 120.75. But how much I am liable to pay for current year is 120.88. So ultimately, it's not a case of excess payment. It is a case of short payment of 12K. That's the reason you have to keep the document source information which we set to be handy, because prima facie you might get the view that okay, their tax has been excess paid, no issue, but it might have impact of last year liability, so that you need to check. So that's the reason we just plot this data to give you one idea that what may be appearing may not be the case. If anybody has any doubt for outward part, they can raise hand or put it in chat box. Now the base sheet which we have prepared, based on that we will start plotting in our 9C. So here we make base sheet which is basically turnover eco, which is our master sheet, and that is what we tag over here. So automatically data keep flowing here. So here you have to do the classification properly. You should know all these tables are mandatory. Now there is no optional field. Earlier they were giving many optional field. Now it is not. Earlier they said credit note, debit note, amendment, even if not reported separately, it was fine. But now they want you to report separately. So this all are mandatory field. So you have to report all this data correctly. So this is how your outward will get plotted in table 4 and 5. And here in 9C, from obviously audited turnover, you came to GST turnover, and then you came to your taxable turnover. In here, there is no exempted, nil rated, non-GST supply is there. That's why value is coming 0. If somebody has, obviously value will start getting changed. Now this taxable turnover which you have got, this is what you have to plot in your table 9 based on rate wise. Okay, so if anybody has any query on outward, we can take it now and then we can move to ITC part. Please explain to, okay, ITC parts, Hari sir will come into that. We are going to come to ITC. First, we are taking for outward. If anybody has outward related, we can take it now and then we'll move to ITC. Fine. So we are moving to ITC part. I hope screen is visible. So with this, for outward, I want to just put this one part more, that reporting in 99C is dependent upon in which period you have paid the taxes. So if you have paid the taxes in 24-25 through 3B, it will get captured in table 4 of R9. If you have paid the tax in 25-26 through 3B, it will get captured in part 5 of table 10 and 11. Here, this is a part 5 which capture the impact of 24-25 done in 25-26. Where you have any short payment is there, not paid is there. If anything you are paying through DRC03, then also it will get captured through table 4. So in which period or for which period you are paying tax will determine. So if you have paid in 24-25, table 4, DRC03 paid for 25-24, then table 4. But if it is paid in 25-26, you have to capture it in table 10 and 11. So this is how the data reporting in GSTR 9 works. So let's move forward to input tax credit. So first part of our input tax credit is to freeze the ITCs. Now over here we know now for 24-25 GSTR 2B is the base. Whatever data get auto-populated in GSTR 2B, based on that only we can claim the ITC. However, whatever data get auto-populated in 2B, you are not eligible to utilize that ITC. Why I am saying? Because eligibility of ITC is determined based on what it is used for. If it is used for taxable and zero rated ITC, then only ITC is eligible. But if that transaction, inward transaction, relate to non-taxable, exempt supply or nil rated supply, then ITC is not eligible. So your 2B will consist of every ITC, every transaction, every inward expense which you have procured from registered person. But because 2B will not be knowing what is eligible and ineligible, it will depend upon business to business base. So that assessment as an SSC, we have to do. So we have to determine what will qualify as eligible ITC and what will qualify as ineligible ITC. So that's the first exercise you have to do based on GSTR 2B auto-populated. Further, even though you might feel this ITC is being used for taxable and zero rated supply, then also there may be a case reversal can kick in. How? Even though if it is used for business purpose, it may be covered under block credit. So you have to check for 17.5, like renting of motor vehicle and all, which is very common, that which are incurred for the business purpose only, even though you are 100% taxable supply, though it is covered under block credit. Health insurance, life insurance of employee, those are specifically covered. So based on eligibility, one more check you have to do for block credit. Then payment to your supplier if you have not made within 180 days, which we discussed while doing other income. Then you have rule 40 to 43. If you are into a supply where you have both taxable and exempt supply both, then common input tax credit you have to reverse by taking the formula prescribed under rule 42 and 43. So with this, let us move to the working of ITC. I hope my screen is visible. This is one of the client GSTR 2B. Okay, here all the data is coming, what comes as per 2B. Now the first thing over you have to do is, you have to go and check ITC available as per portal. Because when we download 2B, even ineligible ITC, which is place of supply issue, which is get captured in 3B, 4D1, get also auto-populated here when we download 2B. So this is specifically an ineligible ITC, which we need to exclude the impact. So the first verification which we do, I'm saying based on that we identify what is an eligible ITC and what is an ineligible ITC. Based on that only, we decide the tables in which it will come. Okay. So this is my 2B, which is showing the figure of 74, 1 crore 9, 1 crore 9, 400. Now this is my total 2B. In this is ineligible as per portal, which I said get auto populated in 4D1. You can check. This is matching with 4D1. This is my 4D1. And this is the total of this year. So this is my total 4D1. Then another check is ineligible as per us. Obviously, all the ITC which is coming in 2B, as we discussed, may not be eligible. So we do our assessment, best judgment assessment to the extent which can qualify as ineligible. And we come down to what could be an eligible ITC. Now, after we drive what could be an ITC, all other ITC. So I hope you are able to see all the things. If anybody have any doubt, any query, they can raise hand and ask. Okay. So we find out what is our eligible ITC. After finding out our eligible ITC, the step which I am saying is first you have to do in order to get all your tables reporting in GSTR 9 and 9C. Otherwise, you will not get what need to be reported in table 6 of GSTR 9. Now over here, my ITC, all other ITC is total 2B plus minus RCM. If RCM is there, that will also get auto-populated in 2B. But in my case, there is no RCM. So it is not coming. So total 2B minus RCM minus ineligible as per portal, which is basically 4D1 of 3B, is what my ITC, all other ITC is coming. Now this all other ITC which is coming, I am now comparing with table 8A auto-populated data. I'm not taking you directly into the tables which what figure to be put in, because to put that figure, first you have to arrive at that figure. So what I am taking you, how you will arrive at that figure. So now here, the first comparison which I am doing is after getting my ITC, all other ITC as per 2B, I am comparing it with table 8A auto-populated. You can see over here the screenshot. Based on this, I have written the figure that my auto-populated 8A is showing 7499, 108, 108. Now, if you will see, there is a difference between what ITC came as per 2B, what coming 8A. So there is a difference. And this difference is definitely going to come. Why it is going to come? Because the basis that 2B auto-populate and the basis 8A auto-populate, both are different. In what circumstance they are different? These are the reason. Now, 2B will include ITC of 23-24 auto-populated in 24-25. 2B will include 23-24 ITC auto-populated in 24-25. There is no doubt that person who have filed belatedly delay, their data will get. How you will come to know? Means how you will get data? Just put invoice data filter. Here, based on invoice data, select your 23-24 data. Here it is. 20K 64-64. This is what I have written. So 2B include 23-24. When it comes to 8A, 8A does not include 23-24. It only consists of 24-25 data. It only consists of 24-25 data. That's the reason one of the difference between 2B and 8A is this data. Second, as I said, 8A consists of 24-25 data. It not only consists of what has been filed in 24-25 itself, but it also consists of 24-25 data filed in 25-26. So But as it is filed in 25-26, in 2B of 24-25, it will not be captured. It will be captured in 2B of 25-26. But 8A is capturing this data even though it is beyond the period, but within the time limit of 30th November 25. Okay, so this much of data is there, which is of 24-25 appearing in 25-26. How you will get that data? Download 8A. Here you can download 8A. I have downloaded the 8A. In that, you will find there is a filing period. GSTR 2B filing period. Go there, write 25. Get your 25 period over here. 25-26 period. Filter it with 25-26 period. This is what is 24-25 getting auto-populated in 25-26, 3,600, 34,000, 34,000. And this is what I have written over here. And if you will see, the difference between 74, 79 is 23K, 29, 29, and same is the difference coming over here. So this is the difference which you will every time find between 8A and 2B. And this difference you need to identify, then only you can fill the tables of GSTR 9, table 6. Until and unless you do this exercise, you will not be able to fill the table. I hope I am clear to this. If anybody has any query, they can unmute and ask.
Ashika ji,
Hmm.
CA Rajesh Mangal from Bilaspur here.
Yes,
What
sir.
is the source of this data? 8A consists of 24-24 data, whether filled in 24-25 or 25-26. Actually, earlier it was 2A, and 2A includes only 24-25 data. Now it is 2B, and as we all know, 2B includes all the data. So what is the source? You have told right now this 8A consists of only 24-25 data, whether that is considered in 24-25 3B or 25-26 3B.
Sir, the purpose of generating this data is because if you notice, even though this ITC based on invoice date, you would have accounted in books in 24-25 because it belongs to expense of 24-25.
It's all right. Ashika ji, my question is the 8A data populated in GSTR 9 consists of only 24-25 invoice date. What is the source behind this?
The 2B is the source only.
But you see, 2B includes the data. 2B is coming from the data, whether GSTR 1 only. And GSTR 1, whether if somebody filed 24-25 data in 25-26 GSTR 1, then it will come in our 2B of 25-26.
Yes, sir.
So accordingly, we have filed the 3B in 25, we have claimed the ITC in 25-26 only.
Correct, sir.
But now in GSTR 9, that data comes under table 8A.
Yes, sir.
So I want to know what is the source behind this? This table 8A includes only 24-25 data. Is there any instructions, GSTR 9 instructions, or is
Yes,
there
sir.
any
There
circulars?
is an instruction.
Please convey that instruction number.
Okay, sir. I will share you.
Yeah, thank you.
Okay. Fine. So till this is okay or anybody has query, then I will move to plotting of the data. Okay. Now with this RICO, once we
Hello.
know what's the, yeah, sir.
Madam, see, you are explaining table 6. See, table 6, we are nothing to do with table 8, you know. Whatever explained is, we can discuss in table 8A, that reconciliation part, correct?
Sir, there is a part, that's why I'm discussing. I will
Okay.
explain. Now I will show how it will come.
In 8A.
No,
Table 8.
6A. 6A.
Okay. Okay, madam, thank you.
Now, with this data plotting, now we need more information, additional information of ECRS. You would be aware of electronic credit reclaim and reversal statement. where we were parking our ITC temporary in 4B2 due to certain condition not fulfill of section 16, which we reclaim once the condition has been fulfilled. So we were parking the ITC under ECRS. Now, why I discuss about ECRS? Because there is a specific instruction for GSTR 9, how this ECRS impact also need to be taken. So coming to the part of R9 filing. Now, if you will see table 6A1, as we discussed, GSTR 9 has now divided my table 6 ITC reporting into two parts. First, they are asking me to bifurcate last year ITC claim in current year and current year ITC claim in current year. Now, how I can get my 6A1 data? Here, like I told, 2B will show me what is my last year ITC I have claim in current year, which I just now show based on date of invoice you will get. So based on date of invoice, this is what the data I got. 20K, 64, 64. But so this is what should come in 6A1. But you will notice one more item I have added to it. So here 20,000 is there. Plus I have added ECRS opening balance over here to drive my 6A1. Because the instruction which has been issued for GSTR 9, it says not only the ITC, which is auto-populated, means fresh availment, 24-23 in 24-25. Not only just that should be reported in 6A1, even the reclaimable ITC, means which you have parked in 23-24 and claim in 24-25, that also need to be reported in 6A1. And that's the reason I have added 20 with ECRS opening balance 2,49,000. Because over here, why I'm saying this ECRS opening balance, I have reclaimed in my current 4A5. How you can check my 4B2 is only 1700. But what I have reported in 4D1 is 250. It means last year ITC I have claimed in current year. So that also will form part of my 6A1. So this is how your 6A1 will come. What is auto-populating in 2B plus what is parked in opening ECRS and claim. It will only come when you have reclaimed the ITC in 24-25. If you have not claimed the opening balance of ECRS in 24-25, then it will not form part of 6A1. So this is how your 6A1 data will be coming. Anybody has doubt on this 6A1 data, they can ask. So
In
once we...
in 6A1 they give again 6H same scenario, no? Reclaimable ITC in 6H.
But that is of 24-25, reclaim in 24-25. Means avail, reverse, reclaim 24-25.
Fair enough. Only you have to show the separate disclosure in that. That's it, correct, na?
Correct.
Oh, thank you.
But if it is a 23-24, reclaim in 24-25, which is in my case, then it will form part of 6A1.
Perfect. Got it. Yeah. Thank you. Thank you.
Okay. So moving forward, now we have drive our 6A1. So this is my table. I have got my 6A1 data. Now what will be the balancing figure is what will get here in 6B. Now, as I divided my 6A1, let us also discuss 6H. Now you may say me that this 6H deals with reclaimable. So it should be equal to 4D1 of 3B. But in my case, you will find it is not equivalent to 4D1. Reason is very simple, because 4D1 has a two part. 4D1 here has a two part. One is 2324. So 2324 impact I took in 6A1. Whatever left over, which is belongs to 2425 reclaimable, is only forming part in 6H. In my case, it is only 800 rupees. Because here you can see 250 is there, and 1700 is what I parked in 4B2. I claimed 250. So out of 249, I have claimed full 249. So 249 minus 250 is what I have 2425 reclaim in 2425. Coming to this part, 4D1, here my ECRS opening balance was 140. I have claimed exactly 140. So this is 2324 claim in 2424, therefore forming part in 6A1, not in table 6H. So 2324 reclaimable 6A1, 2425 reclaimable 6H. This is how the reporting of 6A1 and 6H will be done. Now 6B is the moment you exclude your 6A1, this is the ITC which is available of current year 2425 auto populated in 2B of 2425. In this case, there was one import of service also, so 370, and we have already discussed the flow, how the flow happened of 3B to table 6 in our last session, but for the sake, I am again saying, so 4A3, so over here, so if you have an import of goods, it will go in your table. So if you have an import of goods, it will go in table 6E, 4A1. If you have import of service, 4A2 will go in table 6F. If you have ITC under RCM, then it will go in 6C and D based on supplier register or unregistered. And if you have ISD credit, it goes in 5G, 6G. And if you have 4A5, it will go in 6B and 6A1. So 4A5 is getting split into two tables, 6A1 and 6B. Now coming to the part of reversal. Reversal also, they want us mandatory to report into the specific rule to the rules it's applicable. These are all now mandatory. Earlier there was option you can report under other reversal. Now all need to be reported in the specific rule applicable. Now in my case, what has happened is, if you can see, I have identified my ineligible. As per me, ineligible came to be 3,87,000. But when I saw 4B1, what they have done, 3,49,000. So there, I saw there is a short reversal, 387 and 349. So they need to pay 38K through DRC03. So while tagging in GSTR 9, I have tagged with ineligible as per me, not as per table 4B1. 4B1 is lower, but I am tagging with what should be disallowed. This, you can take it in two ways, this impact. Either you can tag here 4B1 itself, and you can keep the difference in table 12 of ITC here. So here unreconciled difference will come. And where you will say this much of ITC ineligibility avail has been reversed through DRC03. One way. You can keep unreconciled ITC in table 12 of 9C and write the payment through DRC03. One. Second, you can here only write what need to be actually reversed. Here unreconciled difference will not come. But as a precaution and as a safety, here you can write that still ineligible ITC of this much, which has not been reversed, has been now been made through DRC03. This here other reversal will basically 4B2. Now while doing the RICO, we do one validation check to check whether my ITC data is coming correctly or not. This is what the validation check we do. So what we do, we put the data which is coming from table 7J, which is what you put the figures, and after putting the figure, you are coming to this calculation. Now in this 7J, if you will notice, 6A1 is not included. This ITC is specifically excluded while driving the 7J. If you will see the formula, the way the formula is provided for GSTR 9 in the portal, it excludes this 6A1. So I'm specifically adding separately 6A1 to match with my electronic credit ledger closing balance. Because what is my opening, what I availed, and what is I have utilized should match with my closing balance. So this one check, validation check you should do to see whether the data plotting you have done in table 6 is correct or not. So here you will find I got the difference. Mine did not got match. So I put 7J plus 6A1. I put my credit ledger opening, which is appearing in elect. Now here I'm not talking about ECRS. I'm talking about electronic credit ledger. So I put electronic credit ledger, which is basically after March filing. So this is what the credit balance was coming. Similarly, I put what is my closing credit balance here. And utilized I have put from here, because in table 9 we do tax payable versus tax paid, where we tag how much we paid through cash, how much we paid through ITC. So I did this tagging, and ultimately opening plus availment less closing should come difference 0. But if you will see here, difference is coming. When we checked, this difference has come because few voluntary payment was made. So that voluntary payment will obviously will not get captured in table 6 and 7. And after excluding the impact of voluntary payment, I got this much difference. This is the difference which we are saying is a ineligible, which they have short reverse in the working while doing. I shown this 761, 38, 38, which they have short reverse, which is what is the difference coming, because in my case, I have put 17.5 as per me, not as per 4B1. But you have both the option. You can put as per your also, or you can put as per 4B1. But do remember in 13A, you write the reason that you have paid through DRC03 as a safety. So with table 6, now we came to table 8.
Excuse me, madam, a small
Yeah.
query here. In table 6, we don't have to show whatever the ineligible we have reversed, correct? Na?
So you have to show. Means ineligible reverse means?
It can be permanent reversal or temporary reversal.
You have to show. Table 7 covers temporary reversal, 7H, other reversal. 4B2 need to be table 7H. Permanent reversal based on the reason you have to do. My case, it was block credit, so I reported in 17.5.
Yeah, I will show in table 7. I was asking about in table 6, there is no option to show that data is ineligible, correct? In table 6, I'm telling you.
Table
Table
6 is
6.
the gross ITC, which is including
Okay, fine.
ineligible.
Including ineligible. Fair enough.
This is
Thank
gross.
you. Yeah.
6 minus 7 we do, na? Then we come to net.
And suppose while filing 3P, we have wrongly reported under temporary reversal. It should have been permanent reversal. But in GSTR 9, table 7, we have the chance to show it under proper it under the permanent reversal.
Okay. Now, sir, if you are saying by mistake, you shown under 4B2 instead of 4B1.
Correct.
Now,
Correct.
that ITC is still lying as ECRS in your GST portal,
Correct.
which has a chance that you may reclaim it.
But we decided that the travel should have been gone to permanent reversal. Now
Correct.
decided.
So what I will suggest is you reclaim that ITC. You
Okay.
reclaim that temporary reverse, which should be permanently reversed. You reclaim
Correct.
while filing your November return. You add it to
4A5.
4A5. You'd show 4D1, but don't do
Correct.
4B1 and 4B2. Okay.
Correct. Correct.
But you will avail, but not utilize. After availing, do separate DRC03 by doing the
Okay.
reversal.
Now I will show in 4-way, 4 if I reclaim to the extent. Again, I will show in 4D1.
4D1. But
Correct.
I'm saying not to do 4B1 and 4B2 in number written, number 3B. Actually,
Then that
it,
teams, yeah,
huh?
that
Don't
impact
do.
that.
Hmm.
Tell me, madam, tell me.
So I'm saying don't show 4B1 and 4B2 over there. Do a separate DRC03 for 24-25, stating that this has been reclaimed and reversed.
Okay. In GSTR 9-7, that I can show, correct? Na?
GSTR 9 here, there will be nothing. Here you
Inside
can't
table 7.
change. Table 7, you can't change 4B1 and 4B2 classification.
Okay, do to 3B
Through
only, upcoming.
You will reclaim, then do DRC03 and write about this in this. In 9C, you can write that you have already reversed it.
Fine, man. Yeah, thank you.
Now coming to table 8.
Madam,
So-
one question is there, please.
Yes, sir.
See, to be some invoices are reflecting which does not belong to us only. It is not there on the purchase register. We have reversed them to 4B2 and it's lying in that credit ledger. What we should do for that amount?
Sir, if it is, it does not belongs to you, sir, then you reclaim 4A1, 4A5, 4D1, and you do reversal 4B1 permanently.
But it's not a block credit. It is the excess invoices which are not a block. Actually, survey does
Correct,
not belong
sir.
to us only.
I got your point, sir, but still you have parked in ECRS.
Achha, okay.
So you remove it from ECRS also.
Achha, that invoice to be reported in 7H or 7A or B. Reversal.
That reversal, in your case, it will come as a other reversal, 7H,
7H.
because you can't classify in any of the category.
Yes, 7H. So now one more question.
Hmm.
In every month, what we are doing, whatever amount we have paid to the invoice, we are taking the credit. Remaining, everything we reverse in 4B2. We are not following 180 days. Whatever, suppose 1 lakh rupees ITC reflected to me, I paid invoice for 15 lakhs or 50,000 only. 50,000 I am reporting to 4B2. Whenever I am report again 41, I am taking when I make the payment. Is that okay or any difference is there?
Sir, can you repeat the query once again?
See, suppose 1 lakh rupees ITC reflecting in 2B.
Hmm.
And I paid out of that 50,000 rupees ITC, I paid the amount to the party. 50,000 I have not paid. So
Okay.
that same month only, I am making the remaining for 50,000 rupees for VT.
Okay. Means
So
you are
I am not following 180 days. I don't want to keep a track of 180 days. I am from very beginning, I am taking whatever I am paying, I am taking ITC. Whatever I am not paying, I am reversing
no
in
issue,
4B.
sir. It's okay, sir. Fine,
So
sir.
that has to be
Yeah.
reported 37 or 37A in the reversing the whole year.
37, sir. 37 and
180
37A
days doesn't
both
matter.
are different. One is payment to supplier within 180 days. One is supplier did not file 3B. 37.
I paid everybody within 180 days. I paid.
Sir, that's okay. You paid and you are reversing, even though you are saying you are not following within 180 days, but you are complying with 180 days. Correct?
Achha, okay.
You do Rule 37 only, sir.
Okay, 37.
Your
Thank you.
reason for temporary parking is Rule 37. So you do
Okay.
Rule 37.
Okay, 37A. Thank you, ma'am. Thank you.
Excuse me, madam, if you put that that amount,
Yeah.
7H, that again that will go and sit in temporary reverse only, no? If you disclose in 7H. If you put it into
No.
7H,
I got your point. You are saying that excess which he is saying 4B1
Correct.
part. Correct. That transaction does not belongs to them. So here 7H does not go to ECRS. In 3B, I said 4B1. I didn't said 4B2.
okay.
But here, if you will see, none of this I am there due to that transaction does not belongs to me. There is no table A, B, C, D where I can write. Only option left is other reversal. So after writing in other reversal, what I can do is, here again I can give the disclaimer. Even though my table 12 of 9C, no unreconciled is coming, I can use this reason box to show my sincerity, that I am picture clear, I am transparent.
Okay, in 7H, we can confirm that that is not falling under any of this table
Correct.
B2.
Correct.
I'm claiming as permanent reversal.
Hope now it is visible. Okay. Fine. So moving forward, now we'll move to, as we are discussing, we'll go ahead with ITC part. So table 8, as we were discussing, I shown you that table 8A, when you download, if you go to GSTR 2B, and here in this column, you filter out your period of 25-26, which is auto-populated in 25-26. So this is what will go in 8C. And once this is done, you can see my 8D here is coming 0, because over here client has done proper reporting. Means there are still, we are finding cases where 4A5 of 3B is not reported as per 2B, but where the people have followed the reporting pattern which is prescribed. In those cases, 8D is coming 0. Like over here, my 8B. Yes, sir.
Excuse me, madam. See, I
Yes.
think when there was because of technical reason when this disconnected, we were discussing table 8. We did not still we have not at all come at all because straight away gone to 8D. No, that's why I'm having some confusion. 8 is
Okay.
not started. Yeah.
Okay, fine, sir.
8 not at all
8A
started 8 is.
okay. So table 8, if you will see, 8A is a auto-populated figure, which if you log in into GST portal, you yourself can see what is the data auto-populated. Even you can download the 8A Excel sheet from by logging into GST portal. Like we also downloaded the 8A. This is the whole 8A we have downloaded to identify what figure, how the 8A figure has been auto-populated. So over here you can see 74, 1 crore 8, 1 crore 8. And this is what auto-populated data is also showing. 74, 1 crore 8, 1 crore 8. So first thing, Excel and this auto-populated data, you have to verify before you move forward to fill the figures which need to be put here. Otherwise, if this data and Excel sheet is not matching, then the RICO, the exercise which we did of the RICO here will, it got matched. This matching will not happen if the datas are mismatched. Now this table 8B, this is auto-populated based on data you have given in 6B. Now this 6B data which we are giving by excluding the impact of table 4D1 of 3B. Reclaimable never form part of 6B. Reclaimable will go in table 6H. Earlier, due to this only, many of us were getting differences last year, 23-24, because this reporting of reclaimable was already introduced in 23-24. When we were doing GSTR 99C of 23-24, we were taking this reclaimable in 6B. And as the 6B is a comparison with table 8, due to 4D1, we were getting difference because the 6B was escalated to the extent of 4D1. Now, they have specifically explained 4D1 need to be reported in table 6H. Many of us previously only started reporting in 6H because in our firm also we were reporting in 6H. Wherever these columns are come, there is likely chances that this file will be picked for scrutiny or audit. So we should take precaution that unnecessary difference should not come until and unless there is a justification for it. So as 4D1 impact has been removed and client has correctly filing 3B. So when we put only the ITC of 24-25 auto-populated in 25-26, this data of 8D became 0. 8C, you have to report about the ITC of current year you have claimed in the subsequent year. That you have to report. This will be basically on 2B, not based on your books. It may be a case, you might say me, in my books, 10 lakh is lying, out of which only 8 lakh get auto-populated in 2B till October. Because what has been filed till October, that only you can claim due to time limit. So till October, if 8 lakh is auto-populated, you can claim ITC up to 8 lakh only. So over here, only 8 lakh reporting you will do, not 10 lakh, because which is not auto-populated in 2B, you can't claim also, as this is now one of the condition to avail the ITC. Now here the difference comes. Now there can be a scenario, whatever ITC coming over here, or there may be a case my 6B can be lower. Now suppose it can be lower by, okay, it can be a case I have claimed less ITC. It can be a case of short claim also. It can be a case of excess claim also. If it is a case of short claim and that ITC you have still not availed till the filing of your October 25 return, then this ITC will lapse due to time limit to claim the ITC got over. This I am talking about fresh availment, not reclaimable. What is park in ECRS has no time limit. This we are talking about fresh availment. So if suppose this difference come, there is a short claim and you have not availed, then due to this difference, it will come in 8E. If it is an eligible ITC, not claim. Now there are people who don't write gross ITC in 4A5 or do 4B1. They directly write 4A5 net of ineligible ITC. Still, there are few circumstances we are finding, hardly rare, where they are reporting net. So suppose instead of reporting this 78, they have done 78 minus reversal. They have done net reporting, suppose. So due to this net reporting, this much of ITC has become ineligible. Here, like 4,13, let me check. 3,68 will not come negative. Okay, 370 is import of goods. Let me remove. Okay, so over here, there are people who instead of reporting 4A5, 4B1, do direct 4A5 net off. That may be a scenario, then obviously 8D difference will come, but this difference wholly belongs to ineligible, so it will go in 8F. So whole amount will go in 8F. So this is the way you are reporting and explaining to officer why there is a difference between 8A and 8B. This after 8D, 8E and F will come only when 8D has a difference. If 8D does not have any difference, there will be no reporting in 8E and 8F. This will not come if 8D has no figure. So that you have to keep in mind. Another column which they have insert is about import of goods. Now earlier there was import of goods. We were just reporting what ITC was availed. Now they have given into two parts. They are saying whatever is available, what is availed and what is carry forward, both you can write over here. So IGST credit avail on import of goods, IGST credit avail in next financial year. So it may be a case in current year you did 10 lakh, out of which 8 lakh you avail in current year, 2 lakhs you have avail in next year. That reporting has now been made. So it will work as a RICO again, because in 2B also import of goods ITC get auto-populated, but sometimes it does not get properly capture the data. That's the reason this data need to be manually filled if you have any import of goods ITC.
Excuse madam, this 8F ineligible, that is permanent reversal or temporary reversal, madam?
Permanent.
Permanent.
But it will come only when 8D you have 0. Even though here you have permanent reversal, but it will not come because 8D has nothing zero. Because as per reporting, I have to reverse gross, then reverse, and then come to net ITC.
But see, since I told you in the beginning when you're discussing, we have forgotten to put under temporary reversal, say permanent reversal. Now we realize, so I will put it under 6F fully permanent. And the same thing I will show, can show in 7H. No, tomorrow any notice comes, I can inform them. I'm showing in 7H, out of 17.5. That I can explain. No? I will show here 6F, then I will show in 7 table 7 under 7 E. That can be done. No?
Sir, you can do in 7E, but I'm saying your is still park in 4B2. Means your
Correct.
is still lying in ECRS. So to justify your action, you have to reclaim and reverse also. Otherwise, he will say you have not done the reversal because it is still lying in your ECRS balance. And you can claim anytime. You won't claim today. You may claim after 2 years.
Okay.
Who knows?
Okay, that means that notice comes, I have to justify if it's previous,
Correct.
subsequently reclaimed it. That's why I'm showing it here.
Huh. And that's the reason I'm saying to be more precaution, you can write here, table 13. You use your 9C as a tool to justify your action.
Okay, fair enough. Okay, thank you.
Because there are reason boxes, na? Even though unreconciled nothing come, you use this.
Okay, fair enough. Yeah, thank you.
Yes. Now, table 6, I just want to now discuss about the mandatory field. Now, you have to report all your ITC in respective column from the source it has come. If import, from import columns, and if it is from RCM to RCM column. Plus, you have to divide into input service, and capital goods. Now, here what the option they have given is input and input service you can write in input. They are saying input and input service you can write in input. That's the option they have given. But reporting of capital goods ITC is mandatory. So capital goods ITC, you need to report now mandatory. Earlier it was optional. All were filing all in input. Now you have to give this detail separately. So that bifurcation is mandatory for all this head 6B, C, D, E, F, if any coming. How you can get capital goods ITC? Very simple. Go to fixed asset register. Any addition is there in fixed asset register, then check due to which transaction is it's coming, and that transaction if reflecting in 2B and you have claim ITC on it, that will classify as a capital goods. Just remember, you can't claim both depreciation and ITC. So if you are claiming depreciation on tax component, ITC will be disallowed. So this is your ITC part. Okay. Now we understood table 8. Now another ITC part is your part 5, which is here this 24-25 having impact in 25-26. Now, if any ITC for 24-25 you have reversed in 25-26, like Sir Hari Sir, you were discussing now, कि I will reclaim now, and if you do the reversal in 4B1 of 3B now, then you can report in table 12.
Okay, that means now I'll be doing in December, but in the GSTR 9 of 24-25, I can declare there, is it?
You could have declared if you have done till now October month, if you would have done, because time limit is October. Time limit to rectify any
I'm
error
reversing,
done.
no? Okay.
You are reversing, but I said you to reverse through DRC03, not 3B.
But
You
in December
leave
month,
it,
3B, I cannot show
3B.
permanent reversal.
No, 4B1 you can't do through this because as per this time limit is your November 25.
There is only to claim input credit. No, I'm reversing.
Correct,
No, permanent
but
reversal.
reversal also they do in this fashion. This table part 5 is limited to November 25. Correct, sir. What you are saying, reversal, there should not be any time limit, but they will read in that fashion.
Okay, that tomorrow I should tell the officer that we did not do put in the wrong table to permanent reversal. Later on, we put in a permanent reversal. We did not reclaim it. Correct? No.
Yeah.
Okay.
So now this is table 12. If any of you have done 24-25 ITC reversal in 25-26, you have to report in table 12. If 24-25 ITC claim in 25-26 need to be reported in table 13. Now how we will get table 13? Now one part of table 13 you are well aware what you have shown in 8C. That is 3,600, 34,000, 34,000. In our case, we have shown in 8C. Fine. But with that, they are asking me the instruction which has been issued. They are saying you add ECRS closing balance. So table 13 will have two components, 8C plus ECRS closing balance. So that both need to be added to show as carry forward and claim in the next year. So that you have to keep in mind. You can't just report 8C. You have to report 8C plus ECRS closing balance. So that will become your table 13. So this is your ITC reporting in GSTR 9. Now coming to 9C ITC reporting. So there are two tables which deals with ITC reporting, that is table 12 and table 13, 14 and table 12 and 14 basically. So table 12. Now over here, you may be facing issue whenever you write 12B. Okay, so let us first see how the figures will come. Here I am first starting with the data which will auto-populate. 12E. 12E will get auto-populated directly from table 7J of GSTR 9. So 7J of GSTR 9, it will directly get auto-populated. Now you have to keep in mind 7J, which is of R9, does not include 6A1. It does not include 6A1. Now this 6A1 is what last year ITC claim in current year, which is actually 12B. Because in 12B we show brought forward ITC. So 6A1 when we write is what is brought forward ITC, which we have reported in 6A1. But as 7J does not include 6A1, if you write table 12B, automatically difference will come. 1. Second, now how this difference we will tackle, that also I am saying. 12C. 12C is your ITC booked in current financial, claim in the next financial year. Now you know, just now we get the figure for table 30, which is 8C plus ECRS closing balance. So this table 13 will become your table 12C. So it is a total of table 13. 12C is a total of table 13. 12B is a total of 6A1. Now, how I got my books ITC? My books ITC is very simple. If you see, whatever ITC came in 8A is my books ITC. Whatever ITC came in 8A is my books ITC for all other. Plus, in my case, it is import, so I will add that. Because 8A is basically all the data captured for 24-25. Even though auto-populated in 25-26, but it's all the data captured in 24-25. So this is my gross ITC. Here you can see 296, I did gross ITC, which is total of 8A plus 4A2, which is import of service in my case. But 12A is a net ITC. It need to be reported after reversal. In my case, I have taken reversal after I have then removed ineligible ITC, what we have marked as ineligible. So it came 2 crore 83. So this is what 2 crore 83 is what I plotted here. So this is what my books data is coming. Basically, I am taking table 8A for all other ITC and import of goods, import of service, apart from all other ITC, 4A, 1, 2, 3, I'm taking as per 3B. You can go with books if you are maintaining your books data correctly, because there are people whose ledger balances as on March 25 does not match with the GST portal credit ledger and ECRS balance. So if those is not matching, this data will not come correctly. So if I put my table 12A based on current year ITC and add last year ITC, then you will find I will always have table 12F as unreconciled due to 6A1. And this is coming, reason being 12E is only 7J, does not include 6A1. Now recently only they have issued advisory. They are saying let's unreconcile ITC come. And you write in your reason box that it belongs to table 6A1. They are saying you let the unreconciled come and you write the reason box. This is what the instruction has been issued. So accordingly, you have to take the action whether you want to keep unreconciled, or you have one more option that you don't report 12B here, but you can write over here that 12B rupees this is not reported as your table 12E is auto-populated without considering 6A1. But as per instruction, they are saying you write that it is due to 6A1. So you can follow the instruction, because anywhere any issue arise, you can show this is what the issued by the government. So this is also a place where you will find the difference if you plot the data correctly. So with this, we came to the end of ITC. If anybody has any query on ITC, they can ask. Otherwise, I will move to RC.
Madam, one question is there. 4A, we have to include the RCM also. 12A, 12A, we have to include RCM.
RCM, correct. You have to. Because if you will see, sir,
number-
table 7, means 7J, which is coming, it is a total of 6B, C. C is RCM also. B, C, D, E, F, G, all included. So RCM,
now-
ISD, import of goods service, all will be included.
And now you have said 12C,
Yes,
we have to include the closing balance of electronic ledger. Basically, it should be reduced from 12A. It should not be added in a C. You are telling table 13 balance should be added in 12C, only which is reflected in 21 should be added. Remaining closing balance should be reduced from 12A. You are getting my point, madam?
So 12C is basically the ITC which you are saying you have claim in the next year.
Including remaining electronic ledger.
Not credit ledger, ECRS.
But you said now
ECRS, electronic
13
credit
table,
reversal.
13 table, you said 13 table is the reflected in 24-25 plus closing balance. The closing balance should not come in 12C.
Closing balance as per books will not come in 12C.
What are the figure will come in 12C?
Only the credit table 13. How we drive table 13, that total will come.
13 it is also there. Would be to whatever remaining to be claimed in 25-26, which by reverse and to be
Correct.
reclaimed, which also you said it. That should not come in 12C as per my views. No? It should be reduced from 12A.
Reclaimable, you are saying it should be reduced from 12A.
Correct. Reclaimable ICP, you have to reclaim in 25-26. It should not come in 12C. It should be reduced from 12A, as per my views.
Sir, I am understanding your point, but it is the instruction which has, I am going through GSTR 990 instruction issued. It is specifically mentioned there. Okay. And sir, it will not be if we maintain books of account properly, if we have, so whatever balance lying in ECRS would also forming part of your closing ledger balance in books as a temporary park ITC. Correct. There will be three ledger. One will be electronic credit ledger, which is matching with the GST portal electronic credit ledger, which you have actually claimed but not utilized. One. Second will be the credit which you have not claimed, that is 8C. But you have parked that transaction. You have not reported in 3B. This transaction would not be reported in 3B because it has not been auto-populated in 2B. But it will be there in books, and this ITC will be lying in input ledgers, CGST, IGST ledger. Once it comes in 2B, then you park it to electronic credit ledger. Means this is how we do the entry. We book all CGST, SGST, IGST. When we claim in 3B, we route it through one another ledger, electronic credit ledger. Till that time, it is lying in CGST, SGST input ledger. Then one is this ECRS, which you have claim but reverse. As you have claim and reverse and re-eligible to claim.
Correct.
So that is also a balance line.
Okay.
Excuse me, madam. In the beginning of the session, you have shown that discount received. Okay. The value share at least send me the message saying that whenever we received a trade discount from the supplier, so there is no question of supplies involved. So there is no question of reversing ITC or charging GST on this concern. Yes, in the circular. So I just want to refresh that one, madam.
Okay,
Refresh
sir.
on this.
Sir, recently only they have issued a circular on discount receipt part. As I was discussing, that payment to the supplier should be made within 180 days.
Not that one, madam. See, we have purchased around 10 crore from the supplier. For the 10 crore, supplier has given 10% discount. So subsequently, when we making the payment to supplier, we have availed the 10% discount and made that net payment to the supplier. Supplier has given on the various invoices discount. But all those invoices earlier already we have availed input ITC. Now, when he is given 10% discount as a trade discount, so there is no question of reversal of ITC, or there is no question of charging GST and making the payment.
Correct, sir. Correct, sir.
Why this kind of benefit is given to madam? Actually, there's no question of ITC reversal or paying GST service, is it?
Okay, so sir, we'll put it in two parts. Okay. First thing, let's talk about outward liability. Why outward liability will not come? First thing, it is not your supply. Correct? You are getting discount on purchase. Outward liability will come only when it is your supply.
There's no moment of metal is concerned. Good.
Correct.
In this case.
Correct.
Okay.
So outward liability, you agree? There will be no outward.
Correct.
Okay. Now coming to the part of ITC.
Yeah.
Now input tax credit, what was happening is, that's why I was saying that the moment you receive discount, to that extent you pay less to your supplier.
Correct.
Money you pay less.
Correct.
What was happening is department was saying, to this extent you have not made payment to your supplier, you reverse the ITC.
Correct. That's what. Yes.
That's what they were doing. Now the circular has come. They are saying, when you are collecting from your supplier, you are collecting from supplier GST on 10 crore. Correct? Government got tax on 10 crore. Now the discount, which though the discount they have given, but are they reducing the tax amount?
They will not issue GST invoice to us. They will not upload in the portal.
Correct. So you got on 10 crore, then why you are asking on 10% discount which they got to reverse the ITC? When you are getting tax on 100%, you should pass on the ITC also on 100%.
Okay. In this case, since the supplier has not at all uploaded this created on a GST portal. He has just given the financial note. So in our part also, we don't have to reverse ITC or no need to pay
Correct.
GST on that.
Correct.
Okay,
Correct, sir.
tomorrow any notice comes, we'll have to justify in the circular, correct? No?
Sir, you can refer this circular. This has come due to this became a pain in the industry. They were unnecessarily
Fine.
asking, even though they were collecting on 100% from supplier, but coming to recipient to reverse.
That's the same issue, madam. Correct. So we can refer the circular, correct? Na?
Correct, sir.
Okay, don't have to reverse ITC, neither pay GST on that.
Correct, sir.
But in GSTR 9C, and that you disclose that 50, you have to disclose there.
Sir, because in GSTR 9C, what has happened? What you should do, you should net it off with purchase, correct? You should have shown 9 crore as your purchase. But what they did,
Yeah,
they
that's
shown purchase 10 crore, 1 crore they recorded as an income and discount received. So as
that
I'm
means
going through,
we should be
Yes,
netted off with purchase. There they did net
yes.
off. That's the reason I was forced to do 50. Otherwise, I won't be able to come to my GST turnover because that is not my income.
Fine.
So I have to reduce 1 crore.
Fine, madam. Thank you.
Madam, one question, 6.1,
Okay, sir. So,
6A1.
yes,
You
sir.
said ITC of 23-24 reflected in 24-25 plus opening balance of reclaimed ledgers.
If you have claim in 24-20, if you
Okay.
didn't claim,
But
you
it
can't.
should be there as per FAQ. It should be reported 6.1 only, which is other than 37 rule 37 and 37A.
Correct, sir.
Otherwise, it should be reported as 6 even it is of 23-24.
No, sir. You said vice versa. You said what you are pointing out of rule 37 and 37A is correct. There is one thing of 37 and 37A. They are saying if other than 37 and 37A, 6A1. If
Correct.
37 and 37A, 6H. You said vice versa. That's the only thing.
But you said full closing balance to be reported as 6A1.
In my case, sir, it is my
Acha, acha,
example. It is not
Okay.
rule 37 and 37A. In my
Okay.
example, it was other.
Acha, okay. Thank you.
And if I bring 37, 37A, it will become too much, sir. That's why keeping simple.
Okay. Thank you. Thank you, ma'am. Thank you.
Okay, sir. Okay. Yeah, sure, sir. So we'll move on to RCM quickly. Now for RCM, what you need to do is basically you look into all your expenses and divide it into two parts. What is with GST? What is without GST? With GST, you can completely ignore for RCM perspective. Without GST is what you have to focus. You have to check what can qualify it under RCM. There may be a case which may not or which may. You have to keep in mind, don't make 2B as your base for RCM. Don't assume what is coming in 2B is correct because there are certain expenses, even though not coming in 2B, you are liable. So that you have to cross verify. So these are the services which are covered under RCM. Anyhow, we will be sharing your PPT. So you keep a check based on industry to industry. This will come, these expenses. The which are the highlighted one, which are the common one. Means generally one or the other will be there in your balance sheet. And it's not important, it will come in 2B. So check for your transportation, legal. Here, I just want to highlight one new service which has been introduced last year. Many people are leaving it. That is a commercial property rent. If commercial property rent is from unregistered person, RCM has been introduced from October month. So if you have a commercial property and you are paying rent to unregistered person, being a registered person, you are liable to pay under RCM. If you have any of this renting, check the ledger properly and discharge your RCM liability. That is the one which I want because this is what I am finding the people missing it out. 1 minute. So that you check other expenses now more or less people has become a company that which are covered like transport, legal service, sponsorship, government related services. Your residential and commercial are both under RCM, but everything is not under RCM. So check the before and director service, security service, renting of motor vehicle, any of this nature of expense check it. One. Second, focus on foreign expenditure. In audited financial, we specifically give your foreign expenditure. We give foreign earning and foreign expenditure in audited financial. If you have disclosed foreign expenditure, check whether any of those expenses can fall under import of service. So check that part. If it is falling under import of service, you are liable under RCM. This is RCM on notified goods. You can share there. Here, I don't want to highlight anything apart from metal scrap, which has been newly introduced. So if any of you into metal scrap, then check the RCM applicability. Now let us move forward to RCM reporting. So RCM has a very limited tables to report. And it is mostly in 9. 9C has only one table. So if you have any RCM liability, you have to report in table 4G. Here you have to report your RCM liability, which you have paid in 3B. This is what you have to report over here. And ITC, which you have claimed, will be reported in 2 parts. They want us to report in 2 parts. What do you mean by 2 parts? If it is from registered person in 6D, if it is from unregistered person, then 6EC. How you will come to know registered, unregistered? Very simple. If RCM is auto-populated in 2B, it is a registered. To that extent, you can show in 6D. Balancing what you have paid under RCM, you can report in 6C. This is how you can do for RCM. Here, just one more thing I want to highlight is where people are missing this part. There may be a case, my liability, what has come and the liability, what has paid does not match. Like in this example. Here, in 24-25, I am liable to pay tax of 20 lakhs. Now, if you see my 3B, I have paid 18 lakhs. So you will say I am liable to pay balance 2 lakhs. Now it depends how that 2 lakh has been paid. Have you paid through DRC 03 or you have paid in next year 25-26? That is what you have to see. Here I have clubbed multiple, in one only I have done multiple things. So now out of 20 lakhs, what I have paid in 18 lakhs in 3B. Now this 3B, which 18 lakh I have paid, 15 lakh belongs to 24-25, 3 lakhs belongs to 23-24. So 15 minus 20, 5 lakh is what I have paid in 25-26 GSTR 3B. So 20 lakhs of 24-25, out of that, 15 lakh I have paid in 3B of 24-25. Balance 5 lakh I have paid in 25-26. So how much I should report? As I have paid in 3B only 15 lakh, ITC liability in 4G, I will report 15 lakh, not 20 lakhs. Means what is paid in 3B what will come in table 4G until and unless it is paid through DRC 03. If you are paying through DRC 03, 15 plus 5, then 20 lakhs will be your table 4G. But if you have paid through 3B of 2 different years, then only what you have paid for 24-25 will be forming part here. Now here one more twist I given is that I have paid 18, out of which 15 belongs to 24-25, 23-24 belongs to 3 lakhs. Means I am saying the current year RCM paid include 2 years, previous year and current year. What should I report? Should I report only 15 or should I report 15 plus 3? You will report 15 plus 3. So basically, 4G is equivalent to table 3.1D of GSTR 3B. Means the liability disclosed and paid in 3B, irrespective of it in GSTR 9. I hope I am clear. So 18 lakh, even though it belongs to 2 different years, is what will go in table 4G. It has nothing to do that part paid in next year, part belongs to previous year. What has been paid, same you have to disclose in table 4G. What you have paid in 25-26 will not form part of R9 of 24-25. Again, same pattern will be followed in 25-26, 4G it will come. So I hope I am clear on this part, but if anybody have any query, they can ask. Now, for RCM, you should make sure of this validation check. First validation check is table 6C and 6D, that is ITC it is. So your ITC should be lower than or equal to liability paid in 4G, means the liability payable you are showing, because you can't exceed what you have not paid and you have claim ITC. Second, what is coming in 2B as RCM, either it should be lower of what you have paid in 3B or 4G of GSTR 9 which you are showing. It cannot be greater. Then whatever I told you 6C and 6D, two RCM ITCs reporting is there. One for registered, one is unregistered. So if it is an unregistered part, 6D ITC, so you have to make sure your table 4 GSTR 2B will show your registered RCM. So either it should be equal to or less than it. It cannot be more than 2B. So these are the validation check which you have to keep in mind. These are other validation check which you have to keep in mind while doing your 99C. If you will see your GSTR table 4 plus table 10 minus table 11 gives you final turnover, which one you get your tax payable. This tax payable you have to compare with your tax paid and you have to see is there any short or excess. If short, you have to pay the tax. If excess, you can claim.
Excuse me, madam, this,
This is
this
HSN
tax
report.
payable. Can we use it from DRC3 when we have electronic credit ledger balance?
Yes, sir, you pay it
And
off.
also,
I know there was initially they given instruction credit can't be used.
okay.
You are referring to that credit can't be used for payment of tax.
Yeah, where we are kept always 2 lakh SGST, GST electronic credit balance in the event if we have this get this kind
Sir,
of
you pay it off.
liability.
You pay it off, sir. But what we are doing, we are not selecting annual return as a reason. We are selecting voluntary payment.
Okay, that also we can do, correct, na?
Correct. You can do. Government is anyhow
Instead
bother
of
with payment.
that's what. Instead, what we'll do, we don't touch that electronic credit ledger. Instead, we can select our voluntary payment, correct, no?
Yeah.
Hello? Yeah, we'll do that for
Yes, sir.
Thank you.
Okay, sir.
Yeah.
Then comes your HSN. You should remember outward HSN reporting is mandatory. 6 digit above 5 crore, below 5 crore, 4 digit. It is now mandatory. So you make sure you report. Anyhow, everybody is reporting in R1 because in R1 also it is mandatory. So this is a validation check for HSN reporting. Now table 4 of R9 also include advanced and RCM. But that will not form part of your HSN reporting. So table 4 plus table 5 plus table 10 minus 11. Non-GST will not come, but exempt and zero rated supply will definitely have HSN code. So those need to be reported. These are 9C validation check, which is basically first gross turnover 5N plus table 10 minus 11 of GSTR 9 should match with your 9C. Like this is basically what is over here coming. Here the RICO which is happening. Here the unreconciled should come 0. Rounding off can be there, but otherwise it should come 0. If difference is coming, please check thoroughly what went wrong. Similarly, this is a taxable turnover. Again, here from GST turnover, we reduce exempt and supply on which no GST applicable and come down to the taxable turnover. So here also it's a RICO that makes sure with GSTR 9 what taxable turnover you've given and what is coming as per books match. Check difference can come if there is a short payment. So you can write that there was a short payment which you have paid now.
Madam, in case of unreconciled turnover, suppose we did not reported credit notes, whatever the customer given us. So we not reported in GSTR 1 in the credit notes. So that definitely we audited financials and this difference will come. So in such a case, where do we report that 40 lakhs, that whatever that credit note amount, madam, in this the GSTR 9C table?
If
Hello?
credit note, sir, you are saying your supplier given, na discount received.
Not supply, not supplier. Customer has
You are
given debit
talking
note.
about discount receive of supplier, na?
No. That is different topic now. No,
Your supply.
our supply. We
Your
did not
supply.
raise the credit note on the portal in order
The first
to get
thing,
the.
there is a wrong assumption going. Credit note and debit note can be raised against own supply. It cannot be raised against any other supplier. So your customer raising debit note for the supply made by you, it itself is wrong.
No, he is raising debit note, but he is not reporting it as GST portal. He is just giving manual debit note based on which we are raising credit note to the portal. But when in some scenario, despite of receiving manual debit note from the customer, we did not raise the credit note in the portal at all. So we lost the benefit. So that unreconciled, where you have to show here, madam.
You said show as a financial credit note in 50.
In the financials, in the books,
As a financial
whatever the
credit
debit
note,
note,
here you can show 50.
5, madam.
Huh.
Tomorrow we can tell that reduction we can, this minus figure we can show, correct? Na? Minus figure.
Here you, sir, you see symbol show plus minus both can be shown.
So that
This
those with
symbol,
unreconciled turnover will not
it can be
happen.
negative also, it can be positive also. Both way you can write.
Only thing we need to show the breakup of tomorrow in case depend notice comes. How that
Correct.
figure is arrived. Fair enough. Yeah, thank you.
Yes. This is 9C RICO, which we have already discussed. If anybody has any query, they can unmute and ask.
Madam, in the table 6B, is it compulsory to bifurcate input and input goods, capital goods and input services?
Sir, table 6, capital goods is mandatory. For input and input service, you can report in input.
No. In table 6B, for capital goods, showing capital is mandatory, yeah?
Yes, sir.
The rest of the things I can put it in direct lender inputs, the balance thing.
Yes, sir. Yes, sir.
Oh, capital is mandatory. Okay, madam. Because they will
Yes, sir.
identify whether we have a depreciation on that or not. Correct, na? Okay.
Yes, sir.
Yeah. Thank you, madam. Thank you.
Sir, anybody have any query?
Madam, this Excel sheet without data, it be shared to our. We don't want the data. At least that formula driven that will be shared to us.
Sure, sir.
Pardon, madam.
Yes, sir. We'll share.
Hello. We don't want the data. Only that template with the formula one. Yeah. Thank you, madam.
Sure, sir. We'll share.
Thank you.
I hope this session will help you in your 990 working. So if anybody have any query, any suggestion, they can write to us in our Venu@vnv.ca.